Good morning and welcome to the Trading Market Technicals morning call video for June 14th. Yesterday we had a lot of chop, pretty much the same for the last week or so, trading in a large range and waiting for the market to actually break out of this range, whether it be to the downside or to the upside. We had a lot of indecisive movement, price action, price breaking out of certain levels, then failing. And yesterday we had the pretty much the same. The last few days, it's been trading in this range, and I believe it's probably because of what's going on for the weekend of Greece elections. Spain got their bailout, as you know, a few days ago, and markets reacted to that and then sold off on the news. We actually rallied a little bit, and now we're just kind of chopping around in this range. There's 1309 in the S&P, 1315 area. So what I like to do is get into the internals a little bit and see where we are. And as you can see, if you look down here in the area of advancing declining issues, you'll see that we're pretty much it's a little over 2-to-1 negative, 2-to-1 sellers to every buyer. Nothing really that great. Doesn't tell me that's an extreme panic selling or any type of panic buying for that matter. So it's really kind of neutral, lackluster type of environment. What I like to always bring in is the momentum chart, and the momentum chart really kind of gauges where we are as far as momentum, and anything over 101 indicates to me that the markets are overbought, and I would look for some sort of a pullback in the next day or two where the markets are oversold, which would be below 99. And as you can see, we're pretty much right there. So nothing that tells me anything dramatic right now for the today. But we do have initial jobless claims coming out at 8:30 today, and that's something really to take note of because, as you know, we've been having deteriorating jobs, and I think that would be a market mover. Also, we want to keep in mind is are the big funds and players are going to reposition themselves sometime today or tomorrow and square positions before the Greece elections that come out on Sunday. That's something to take into consideration. In the meantime, while we're trading, we want to reduce our risk and our exposure and trade the best setups that we see so that we can minimize if something does happen in intraday, you're not going to get hurt until this uncertainty subsides and the markets can realign itself and get back to some normalcy. Well, let's get into the charts here. I'm seeing a lot of mixed signals. And what I like to do is let's grab a 30-minute chart here and kind of really gauge. There we go. What I'm seeing right now is mixed signals, and here's a 30-minute S&P 500 chart with a head and shoulders pattern. Now this is a small pattern, but still measures somewhere down to the 1265-ish, 1270 area. And as you can see, you have your head, your left shoulder, and your right shoulder. Here's our neckline break, 1310, probably around 1300, 1305 in the minis if you're tracking the minis versus the S&P. So we're looking at some mixed signals here, and this kind of tells me with this choppiness that the markets are ready for another move. Now, wish I could tell you what side and where, but we can't. Markets right now are kind of digesting what happened with the Spain bailout, and I believe what's going to happen with Greece is going to be a big factor here. And what we're looking at, these patterns, nothing is confirming certain time frames. So we have these mixed signals. And here's a 30-minute chart, and like I indicated, with this head and shoulders pattern. Now if I take the 60-minute chart here, and the 60-minute chart is showing me an inverted head and shoulders. Now this inverted head and shoulders is a bullish pattern with the neckline coming in somewhere around the, let's call 1330 area, right around this R1 area. Now this is a very bullish pattern, which I'm not going to bring up because it'll take too long. I see inverted head and shoulders in the transportation sector. I see it in the Russell, which Russell gauges risk, and we always want to take a look at what the Russell's doing because that'll give you a risk on, risk off type of mentality. I'm also seeing in the 30-year bond. The 30-year bond actually has a head and shoulders pattern, which is inversely correlated to equities. So that's something really to consider. So until these mixed signals, now the higher time frame will always take precedent of the lower time frame. So I'm seeing more bullish pattern than I am seeing a bearish pattern. So we want to really keep an eye on what's happening here and to really understand where is the next move. Let the markets tell us what the next move is, not be opinionated, especially in this type of environment when you have this uncertainty going on. So we do have a larger time frame showing bullish patterns, where the shorter term time frames are showing me that we do have some sort of a possible maybe one more sell-off. And what I'm thinking here is, if we're here now, I'm thinking that maybe the S&P sells off, maybe brings this right shoulder down a little bit more, maybe down to that 1306 level, 1300, 1290 again one more time. Bring it down to this area here, and then from there we rally back up again. And that's something that that is not out of the ordinary. Something like this, and then break out. And that's what I think may happen. Doesn't necessarily have to happen, but once we break out of this neckline up top and we hold on a closing basis, that's a very bullish sign for the markets itself. And let's take a look at the daily chart. Now the daily chart here, as you can see, we're hovering around the 200-day moving average, and we had this large head and shoulders pattern which broke out and met its objective target. So we're sitting here in the 200-day moving average, and we're inside day, outside day, breaking back up, failed breakout, back down again. So, but this whole 6 days we were inside. We had these inside bars, which there is actually no new order flow. If you really think about it, right? There's no new order flow from 1306 to 1330. Let's just call it round off numbers. Really, nothing has happened in the last 5 days. Okay, now definitely stocks that you can trade, but in general, there's no new order flow. So that tells me that the market's waiting and pausing and waiting for something here. And we're sitting right on the 200-bar moving average. So there's something really to consider going forward, and let the markets dictate where the next move is going to be and then react to it, because that's the best way and the safest way to do something like that. Now, today, let's just take a look at some economic numbers coming out. They always are market movers. And here we have our 8:30 report. We have a Department of Natural Gas inventories. Really not that much unless you're trading natural gas. Consumer Price Index, CPI, that's also a big market mover that can move markets as well. And something really we want to keep an eye on, because we did have our jobs that are deteriorating for the last week. And as you know, non-farm payrolls were pretty dismal. Now, that's also could be a positive. Do we have QE3 on the table? Now, as the FOMC statement came out, Bernanke did not hint on a QE3, so that's something really we need to consider and also think about as well. Okay, moving forward. But for now, we want to look at what the short term is, and the short term picture is a lot of chop, and we want to either going to have to break below that 1300, 1291-ish area in the S&P, and I could see further selling down to the 1260 area, and that would again extend that right shoulder. But that still would be a bullish pattern. And after that, we might have a nice little market rally in the foreseeable future, maybe in the next few weeks. But I would not rule out the fact that we could also break higher as well. Okay, and I know that's really not much to go on, because we really want to let the market tell us what to do and not really be opinionated here. Okay, not much in the earnings calendar here. Basically, earnings season is dried up and ready for the next area. And then we want to look at just below, you could see our support and resistance area here. And as you can see, 1324 is going to be a big area. 1313 is really where we're just under that now, and that 1280, 1291 is going to be big support. So that's something that we want to keep an eye on, okay? All right, guys, that's really pretty much it for today. And I hope you liked the start of the new video. It is a work in progress, and we will be improving it as we move on, okay? But I wanted to get the videos out. I think it's a better analogy, and you can really understand where I'm trying to kind of get my thoughts out a little bit better via the video than just typing up a small brief summary of what happened yesterday and what are we looking at, okay? Have a great day, and we'll see you tomorrow. Take care.